What's up everybody, Tom here with another video. In today's video, we'll be talking about the latest movements in the stock market. We'll also be taking a look at our technical analysis levels together for the S&P 500, Nasdaq, Bitcoin, Tesla, and more to try to get an idea of what happens next. Yesterday, we saw the biggest flash crash in history in terms of dollar amount on Bitcoin. At the same time, we've seen the market break below critical supports. Let's take a look together right now. Stay tuned. So I think it becomes very, very clear when we look at this heat map what was under fire yesterday. And yes, it was large tech. Microsoft, Apple, Google, Amazon, Tesla, all of these companies, including every single semiconductor, were down. That's in stark contrast though to things like Disney up 4.42%, JP Morgan and the rest of the banks, and the energy sector, which continues to outperform. When we take a look at the indices to get started, Dow Jones, SPX, Dow Jones was actually up. SPX was down 0.77, not a huge move, but it's when you look at the Nasdaq that you see the true move. And this is very symptomatic of February. In January, we made some videos talking about how Feb is usually the weaker month for the Nasdaq in terms of indices, and then it recovers throughout the rest of the year. And it seems to be coming in late here, but there is a pull down in that sector or that index overall. We look at the sectors, energy, financials still tend to outperform here. And all I can say is this is very common through the first stage of a bull recovery. However, we are in month 4 or 5 of this recovery in energy and financials, and it tends to only last around 6 months and then can stagnate for quite some time. Technology down 2.21%. Also, the consumer discretionary down 2.11%, and the rest were kind of middling around, being up and down throughout that period. So big news for what happened over the last 24 hours. Well, firstly, AMC stocks has rallied 9% after theater reopening plan in New York City. You can see here AMC 14.91%, 655. That's right. We have a 655, up almost $1 from yesterday's movement in terms of where it was in the pre-market. This is a pretty nice move. It does show that AMC is going to break some key resistances. $6 and $6.50 were both broken. And that coupled with, I think, Roaring Kitty doubling down on GameStop stake, we know that AMC and GameStop trade very, very similarly in terms of sentiment, has helped to amplify that news from AMC. So good luck to people out there. We did have GameStop also moving long, but it did have problems at the first resistance. And we'll be taking a look at that together live when we stream tonight. So definitely subscribe if you want to come and watch us do those types of things. Now, the question on everyone's mind is, can this bull market in stocks survive this concern currently? Rising inflation, bond yields. Well, what's history told us about this? I'm not too concerned about this necessarily for the markets, but what I think is really telling is you come down here and you have a look at the actual sectors that have outperformed. IT, consumer discretionary, the two sectors that were down yesterday, yeah? Utilities has performed poorly, and then of course real estate, etc. have not performed that well down here. We scroll down, read this article. The average annualized outperformance relative to the S&P 500 and the percentage of time it outperforms the S&P 500 is largest for tech, consumer discretionary, and industrial sectors, 3 of our preferred sectors, while higher dividend yielding sectors like utilities, real estate, consumer staples tend to underperform. So if we were going into this period, actually the sectors that everyone's pretty hot on are still most likely the correct calls. And it's just funny how you get those mixed messages. Remember, I say on this channel all the time, it's always stuff in plain sight that you'll see when it comes to a market having a correction or a movement, and it won't be something that just comes out of left field often. It'll be like, especially during a slower or faster melt up like we've had, it always is some stupid reason. They then push it down, and then you realize that actually that wasn't important when you go back and retrospectively look at it. It's the fear that they create in the markets. And right now, tech does deserve a revaluation in terms of some of the stuff is hot, so it's a good excuse to do it. Let's now get into the technical analysis side here and check out this VIX, or volatility index. So 24 was our alert level yesterday. We did see it get above 24. We saw it not really close though. Remember, I always say the close is the key. And every single time it got its head above 24, it rejected and closed right underneath it. So I would still like to have that a movement up, and I'd like to see a spike up, close here. I don't care where it is above 24. And then hopefully that then signals to the 30 and possibly even the 37.5 for VIX movement. We are in a bit of a band here, but notice we zoom in again. There is no close above that 24. It actually literally was right on the level. Dollar index, another interesting one. Dollar index was trapped. We had no real idea. We said we were probably more bearish on it just because of the moving averages yesterday, all sitting on top of each other. It came down to the 90. It's sitting right there right now. We close below. We then trigger selling back in. And it looks like the trend is still down for now, but very hard mixed messages here from the dollar index. Mostly bearish, but then again, it's still in the middle of the zones, and it makes it very, very difficult to trade with any kind of certainty. Bitcoin, we mentioned the flash crash yesterday. You can see it here, all the way from 58 down to 47. Now, we were watching this live in the stream, and it was pretty amazing to see these kind of falls. It's been a while since we had an almost 20% correction, and we theorized that it would come between these two zones, or worst case scenario would probably go down to about the 46.5. And the reason why that is that was 20% off. And for anyone that's new to the cryptocurrency markets, 20 to 30% in bull runs in terms of correction, while it's brutal, is quite common when you have overextended markets. So it's come down, it's then heavily bought up, which looks like the bottom's in for now. And we're kind of now consolidating around that 53, 54 area. I do like this zone. I liked where it was. You can notice we'll have the 38.2 fib almost there as well, holding it up. And that's one of my favorite fibs when it comes to taking the entire move. And this is the movement here from the 21st of Jan all the way to the 22nd of Feb. Basically 1 month of movement. You can see the fib and you can see the 38.2. Didn't quite get hit, but the zone did get reached. And when you're trying to pick a falling knife like cryptocurrency, it's tough, but that's the type of area that I'm looking for and targeting. And some of the methodology behind that is the 50,000 to the 48, where most of those resistance structures were that could act as support, plus getting around that 20% number. Let's have a look at gold, see what's going on here. So here's the 1 hour. Now, yesterday we talked about this on the stream as well. I just want to show everyone one of these great and normal setups that you have that shows you that the end of the downtrend is over and you're starting to move up. We have here a little inverse head and shoulders. We have a beautiful resistance level that's tested, and then notice this, it closes above, quickly comes down, creates a bullish hammer rejection, and then flags for the next move. We're right at resistance right now for gold. So this 1810 area was always going to act as resistance, and some of the reasons why: previous support, 1820 will also be a problem. So all of this type of area, I expect some consolidation, and then we'll have to see if gold can make it to the next move. I'm not particularly bullish or bearish. I think that was a great day trade and a very nice setup. And for anyone that got that, congratulations. We did take a look at it during the stream. It was a very interesting, nice resistance, and all that resistance has happened at the previous support, which means that it really was thinking about the technical levels. Now, silver, on the other hand, changes a little bit here. Look at this, 2780, 2780. Now we have a close at the 28. So we have a bullish close on silver for the first time. And this is signaling most likely a larger move up to the 29.30 range. Will silver be able to hold it? I hope so. I certainly hope so. You know, I've been more bullish on silver than I have been on gold because it has properties that are used in the market. We've seen materials move up heavily. Dr. Copper going absolutely crazy. Iron ore, of course, another massive move there. And silver is above the zone. So look for pullbacks back to this area, back to the 2780, potential little kind of movements or support found there. And then hopefully we get to 29 and possibly even the 30 over the next couple of weeks as silver continues to grind higher. Maybe hashtag silver squeeze is working. I know quite a few of you have been mentioning that. Let's go to the market now. What's happening with Tesla? Well, Tesla broke our channel last week. We kind of said that this would become the decline of Tesla, and boy, oh boy, I guess we were correct as a community. Now, we've basically reached one of the first targets. We're not quite there yet. You'll notice 712 in the post market. I'm thinking it goes to 700, if not 650 into the previous structure. Tesla seems to aim for $50 increments, and of course it likes $100 increments, and it's been some time before there's been really any correction. It was coiling, it failed the coil, and that was our teller. The first failing of market structure for Tesla in quite some time was the tell, and everything is pointing towards some further sell-off here in Tesla. The first kind of hour, we go down here, have a look at this. The first hour was strong. It always is. This is when the retail traders kind of buy into it. Here yesterday, there was some buying coming through, and then they couldn't hold it up. Remember, Tesla is a heavy retail stock, so the first hour doesn't show us the true sentiment of the day when it comes to this pair. Good luck, everyone out there. We're not saying it's going to crash at this stage. We just think this is a healthy correction in what was an epic move. AAPL, trend line was broken below. We're now coming into the support. So AAPL here, or Apple, 125, every $5 increment's important for Apple. But look at this, weekly 20 is being reached. So that's 126 in the post. And right around that 125 level, we have a weekly 20 moving average and previous resistances. Will this be the hold zone? Let's take a look at the fib of the move here together. We'll load this fib up. Is that enough of a pullback? Well, it's right around that 38,250 fib. So you would usually expect Apple to find some buying pressure here. It will come down to the rest of the market sentiment to whether it does. And if it breaks through here, I could very easily see it at the 120 or 110 levels. And that's just how fast Apple could move due to the weakness in the Nasdaq right now. Remember, Apple makes up 11% of the Nasdaq, so it's a very important indicator. SPX, well, SPX did it. Trend line found resistance again. We scroll through here. It's not that big a move, really, when we put it in place here on the S&P 500. Previous weak rejection levels now closed against on the real market, the SPX, the S&P 500. We have the 20 moving average. I would have liked to have seen that close below last night to show us that the bearish intentions were real. When this bull run started in November, in terms of the second kind of run, look at this. Every single 20 moving average was finding pressure. Then we had that random enigma that happened at the end of Jan into Feb. And now we're back on the 20. Is this all she wrote for the correction? This was our first target. So the first target is reached. We breached this level. We moved to the 50 moving average, or 3,800. We breached that level, 3,600. And I really feel at that point, we should be bottoming out in a correction. That is the correct move. It all makes sense to the fibs. You put a fib on this, you'll notice that it pulls back to the correct kind of levels. And I think the 3,600 makes sense. But for now, this is the first point, 3,800 is the second point, 3,600 is the third point in the sell-off support zone. So keep a watch on that for the S&P 500. So I want to talk about just the US 500 here from a trade of the day. So you can see at the start, we get buying pressure coming through. Most of this was just before pre-market. Then we hit the previous resistance, which was support around that 39, and then start to sell off immediately. It just shows that the market is trapping retail traders at the initial trade with the bullish intentions. And there's clearly a lot of bullish FOMO sentiment from retail traders right now. We go over to the US 100. It was a similar story on the 1 hour, except that it wasn't the rally. So the rally did happen, it tried, and then just failed instantaneously. And that's just because there's so many stocks in the Nasdaq and in the tech area that are very, very high. And I mean very, very high. Where's our target for the Nasdaq? Well, down to 12.8 makes some sense to find support there. And then any further, probably back around the 12,000, 12.4 area where previous resistances happen. All of these should sync up with the S&P 500 at the same time at the key levels. Definitely keep watching those. All right, guys. Well, I hope you enjoyed today's video. If you did, please remember to subscribe. Of course, good luck out there. Make as much money as humanly possible. But remember, practice that risk management. Bye for now.